it might be billions of dollars worth of a question there. This crypto bear market, I think, is brought about really by a confluence of factors. Maybe the biggest story here is the inflation environment creating changes in macroeconomic policy. I don't think we've seen inflation this high, 8% in the U.S. It's been the highest for the past 40 years, and we're likely going to see the Fed raise rates a little bit more to combat inflation. Unfortunately, they seem to be between a rock and a hard place here. Either they fight inflation now by raising rates, but obviously the downside is that markets will probably continue to decline, and not just in crypto, but we're also seeing maybe not as much in percentage terms, but similar destructions of value in other markets and asset classes.
All right, so it's not really the time to be, risk on right now. But tell us, is there any catalyst that we can see in the near term that might at least put a support level to what has happened to be halving of the value of this cryptocurrency?
Right. So Bitcoin had declined about 60+% since its all-time high. Ether's value has declined maybe about 70%. Now, in the immediate term, I think the clearest sign of a recovery will actually come from the inflation figures coming out of the U.S. Right? If the Fed gains some comfort that inflation is under control, we could see a loosening up of monetary policy, and federal funds rate, target funds rate, going to go down, resulting in higher asset prices everywhere. Absent that, we could also look towards historically, crypto market cycles have enjoyed a 4-year cycle following Bitcoin halving. What's that? So that's when the supply of Bitcoin gets cut in half. We probably won't see increases along those lines for maybe about 6 to 12 months. So we're in for a long winter, shall we say.
Quickly here, like you mentioned earlier, you have a confluence of factors here. How worried should we be of the market conditions here for crypto? You have other factors. For example, you have Celsius at least laying of employees, halting withdrawals, and at the same time Coinbase laying of employees here. Should we be expecting further fallout here?
That's an interesting question, Jester. It's really a function of how much funding a lot of these crypto companies have going into winter. The crypto industry is no different from any other industry where in the event of such a downturn, it's going to be very difficult for companies to raise capital. And I think Coinbase and other firms that have laid off people are just taking the bitter medicine now of saving some capital, cutting costs, preparing themselves for a long winter. But probably with the fallout of the crypto lending firms, there's too much uncertainty over the systemic risks. And that's probably the biggest downside of a decentralized financial market, right? There's no institution that's expected to prop up everything. And right now, the sense is that there's too much uncertainty over systemic risks. And so people are less likely to allocate more towards crypto at this point, even if these are historically pretty low prices that we're seeing.
Nichel, just a quick question on what you mentioned earlier on, just to follow up on that. Bitcoin in particular is still linked to a finite asset, right, which is mining, and some even compare it to gold. There's an intrinsic value here. Some are saying that's $23,000. Can you say with at least some level of confidence that we're not really going to go well below that level naman?
So I suppose the confidence there, Danny, can come from the fact that 20K was the previous all-time high.
Okay.
And it's very natural for market participants to see that as the next support level in light of this big crash. Bitcoin is finite. Bitcoin is highly decentralized. So many people have and trade Bitcoin. So you could make the argument that what we're seeing here is just a mere reflection of the reduction in supply of capital. And when you take money out of anything, all the prices come down anyway, right? So the view there could be that if you're a holder of Bitcoin, hopefully you don't have to sell in the next couple of years and just ride out this wave.
Okay.
Now,
Go ahead, Jess.
Now, Nichel, when is the right time to buy the dip here? And what signs are we looking for to say that we are really here already at a crypto bottom here? And what assurance can we give investors, that should there be any form of reprieve here, that it's not going to be temporary?
Jess, the term "buy the dip" has been very popular among crypto investors because we're so familiar with volatility. But I think the difference with this particular dip or crash, shall we say, is that it's happening in an environment where interest rates are going up. We've enjoyed historically low interest rates for the past decade or so, and that's when crypto. That's an environment where crypto typically bounces back quickly. So it's very difficult to really make the decision to buy the quote unquote dip, no, or to even buy the crash, just because we don't know the time horizon of any potential bounce. So not making any, I guess, financial advice or recommendations here. But if you have a very long term view, then what you could be seeing are prices that are going to be very low in hindsight.
Nichel, is this slump isolated to Bitcoin and say, specific cryptocurrencies, or are you expecting, a confluence of events this might spill over into even companies that hold Bitcoin or those that are using this kind of technology in their operations?
Oh, absolutely, Danny. So Bitcoin, we probably talk about Bitcoin a lot as an indicator, but you're seeing value destruction everywhere in the crypto space right now. NFTs are down massively. Play to earn, obviously, which depends on NFTs for its value, are also down. Companies like exchanges probably fare better than most because in times of volatility, there remains to be a lot of trading. But companies that are holding sizable amounts of crypto for short-term gains, or companies that are building at the protocol level, developing new protocols, new blockchains, most will probably struggle, right? And that's not an indictment of future potential. It's just a reflection of the fact that in this environment, it's very difficult to raise money when you need to start paying employees fixed salaries every month.